Hey guys, welcome back to my YouTube channel. My name is Alayla and I trade trend lines. Today's video is basically going to be about how I properly spot structure to use my Fibonacci retracement tool within the internal structure basically. So it's between the most recent swing high and the most recent swing low. Alright, if you don't understand market structure, if you don't understand how to identify the major swing highs and swing lows, you are going to get fake signals, mixed signals. You're not going to know the actual direction of the market. So it's best to know all of this, all right, before you say, all right, you're going to trust your analysis. It's best to understand market structure, internal structure, the how to identify the major swing highs and swing lows. All right. So if you like the video, please like, please subscribe, please share to someone who you think will find this information beneficial. Let's get into it. All right, so just to give a textbook example of what I'm talking about. So say we have a trend, right? We have a high, we have a low, we have a higher high, now we have a higher low. Then we are going towards the next higher high and the market is starting to reverse. The internal structure is going to be between the most recent swing high and swing low. So this is where the internal structure is going to be, right? So we can come in with our Fibonacci retracement tool. It's between this recent higher low and this recent swing high. All right, so in this area here, this is the internal structure. The lowest point, this is an uptrend, so the lowest point in this internal structure is going to be our new higher low for our next internal structure after the market breaks this high right here. So what I mean by that is if the market, let's say, if the market continues from this point, let's say it comes to this point, it starts to do this, it starts to consolidate basically, right? So it's consolidating between this low and this high. It's just going sideways, and you know sideways movement is consolidation. We're waiting on the lowest point in this internal structure before the market actually breaks the previous high. All right, so this is the lowest point in the internal structure that pushed up the market to break the previous high right here. So this low, this is now going to be our new higher low for our next internal structure. And what I mean by next internal structure, let's say the market continues up, right? It's just continuing to the upside. All right, and then you know it's going to start its pullback for its new higher low. All right, the new internal structure is going to be between this low right here and this high. It cannot be this low. It cannot be this low either. All right, because we're working with the lowest point inside, the lowest point that the market went to inside the internal structure between the previous low and the previous high, before the market finally broke this high to continue the uptrend. All right, and then we can now come in for foresight or for prediction. We can come in with our Fibonacci retracement tool to say, okay, maybe the market is gonna retrace to a demand zone somewhere right here, or a fair value gap, inverse fair value gap, key support and resistance level. It can do that. All right, so that's basically how you do that. This is for the uptrend. I'm going to show you an example for the downtrend. So this, say the market creates the low, then it has a high, continues to break the previous low here, then now we have a lower low and then a lower high. The market is starting its new pullback right there. So the internal structure is going to be between the previous swing high right here and the current low, the current swing low. All right, so the internal structure is right here. The highest point, so for the uptrend it was the lowest point, for the downtrend it's the highest point inside this internal structure. That is going to be our major swing high or major lower high for the next internal structure. All right, so let's say the market continues, we have our Fibonacci retracement tool from this high to this low. Let's say the market continues, let's say it continues to the 38 right here. The market starts to reverse. It creates a lower high in the internal structure. This is internal structure, all right? Then it goes back up to break this high right here. This does not mean that the overall trend is reversing. All right, this does not mean that the overall trend is reversing. This is just a change of character on the lower time frame within this higher time frame internal structure. All right, so it can reverse to here. It can even come up to the 78% fib line here, and then once it breaks this low, the initial low breaks and closes below it, we can now ask ourselves which point in the internal structure was the highest point before the market broke the swing low on the higher time frame. This is the highest point within the internal structure. So this is going to be our next major swing high for our next internal structure. So it's gonna look something like this. Say the market continues to the downside and then it starts to pull back. Our new internal structure, let me delete the fib. Our new internal structure is going to be between this high, this is the highest point, and the start of the pullback right here. All right, now we come in with our Fibonacci retracement tool from the previous high because this is a downtrend, and then we just do the same thing. The highest point in this new internal structure is going to be our next major lower high for our next internal structure. All right, so I'm going to show you an example in the market. All right, we're currently on 101 second. We're on the 24-hour time frame as well. So based on what I can see here, this is the highest point that the downtrend has started. So our internal structure, it's going to be between this high and this low. I say this low because it's a steep and proper pullback. The pullbacks that touch the 38% fib line, to me, that's a proper and steep pullback. That's as we can see here, this one candle pullback did not make it to the 38, so that's not a pullback that I focus on. That's not a steep pullback, that's not a proper pullback. None of these pullbacks in this impulse to the downside is a proper pullback. This is why I say this pullback, however, is a proper pullback, because as you can see, it came and touched the 38% fib line here twice and then pushed to the downside. So this is a proper pullback to me. All right, so our new internal structure, remember this is our first internal structure. Our new structure is going to be between this high. This is the highest point. It's not this high, okay? This is the highest point inside this internal structure that pushed down the market, that finally pushed down the market and broke this low here. So now our internal structure is between this high and the start of the pullback right here. All right, so now we come in with our Fibonacci retracement tool from this high to the start of the pullback. For now, we're going to say the highest point inside this internal structure, we're going to highlight it as our major swing high or lower high for the next internal structure. All right, so this point right here, it's not this high, it's not this high. This is the highest point within this internal structure for our next internal structure. All right, so it's gonna be right here, and the start of the pullback happened right here. So this is how we're progressing. Now, since we're currently here, we use the Fibonacci retracement tool. Before this side of the market was established, we would use our Fibonacci retracement tool from the last major swing high to the start of the pullback here. See that the market came to the 38, we will say, okay, now we're having a steep and proper pullback. The market continued to make its pullback. It continued to pull back until it reached the previous high. On the higher time frame, like let's say the weekly, we would just call this liquidity, a double top, a equal high. As you can see, the market only wicked us out. It didn't close above. It didn't close above and gave us buying momentum, buying pressure. No, it just wicked us out and closed below. So we're still within a downtrend. We're still within this internal structure. And as you can see here, we have a head and shoulders pattern, which signals that the market is going to reverse from this point. All right, so I would most likely be looking for sell, since it didn't close below the neckline. The daily close below the neckline would give me confirmation that the market is going to continue now in the downtrend. All right, so that's how I map market structure That's how I use my Fibonacci retracement in the internal structure. All right, this can be used on every time frame, on every time frame. All right, so that's basically a general example of market structure. If you want a more in-depth analysis, like on the lower time frame, on the 1 hour time frame, 4 hour time frame, in the choppy markets as well, you can request it. If you like the video, please like, subscribe, tell me your ideas, what you think about the video. You can check out my TikTok as well. I post there more often than YouTube. But yeah, you can do that. And thank you for watching the video. Thank you for watching the video. Oh my god. Bye.